Good morning, everybody. Today is Friday, March 27th. And let's get into, I don't think we have anything economically today. We have some revised University of Michigan consumer sentiment at 9 o'clock. We have some Fed speak at about 10 and 10:30 as well. And then I don't see anything after that. You had some movement yesterday with President Trump speaking and Hegseth and a few other members of the administration, so that moved the market pretty good. But nonetheless, if we take a look at, let's just start at the ES really quickly. If we look at the ES from where we started the week right here, and look where we're at. So all this emotional stuff during the week, we're flat. So got to take that into consideration. That being said, let's get into, let's start with the VIX like we have. VIX is elevated now, so getting close to an area where you could think that equities could be getting close to bottoming out. We still have this gap up area. I'm going to extend this to Monday, Tuesday, probably of next week. So we didn't fill this gap up from yesterday or from 2 days ago. So that's still open. Again, VIX is elevating right now, getting to a level here, this $31.04. I wouldn't be surprised if you get a little rejection up here. However, if you do get through that 31.04, I would not be surprised if you can push to that 35.17. I would say that if you have some conflict happening in Iran over the weekend, that would push it. I think what's been happening during the week is that the markets on Monday or Tuesday, they rally a little bit, and then Wednesday and Thursday, they're kind of flat, or Wednesday they're kind of flat, and then Thursday and Friday, I think it's kind of a risk off based on people or institutions don't want to take any risk into the weekend because they don't know what they're going to be coming into on Monday morning. So until there's a resolution out in Iran, I think that's what we're going to be running into right now. So you can see right now VIX is elevated. We want to see that VIX below that $24.80. It's a 20-day moving average. If we can get below that, then we can get back to some normalcy in the marketplace. A couple things I'm going to throw up there today. Brent crude oil is $104.15. Those of you that are not familiar with this is kind of European crude. So that's elevated a little bit right now. You do have a little bit of a gap down from this morning. That probably closed the gap at 105. So that's elevated right now. We can take a look at this on a 4-hour chart. Let's go all clean here. So it got as high as 119. It's the first time actually looking at the chart, but I thought it'd be wise to have these on the charts right now because everything is being, all eyes are on oil right now. Oil and the conflict, right? So that's going to be a direct impact on inflation. So we're trading in this range right here. If you can get this Brent crude down below $97 a barrel, that's going to be pretty important. So this is pretty much European oil. And then if we go to WTI, we're below $100 a barrel. That's good. That's here domestically. I would say you want to stay below that 101.03. And so, but you can see we are trading kind of in a range here. I would say that range there, 87.42. If you could dip below 87.42, I think that it's going to be very good positive for equities, and equities will start getting off to the races a little bit. But you can see right now we're kind of channeling here. So elevated up here. This is a big spike at 119, and then you had the big drop. And these are all based on announcements, right? This is probably some kind of war impact. And this is an announcement of a ceasefire type thing. So right now we're channeling out. So pay attention to crude for domestic oil, and then Brent crude for European oil. And that's kind of worldwide oil, everything that's happening over in the Straits of Hamas. So let's go over to ES. By the way, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video. So you can see right now, ES 4-hour chart right now, we are dropping below the... Where is this here? That's a 4-hour chart. Let's go for a daily. Yeah, so we are, let's go 15. So we're still hovering right at the pre-market Monday level here at 64.7810. You're going to want to hold that level. I think if we lose that level and when the market opens up, I think you're going to drop down to the 63.7175 level. It's going to be important if we do lose this pre-market level from Monday at 64.7810 and go down to that 63.7175 level, which is September of 2025's low. It's important to hold that level. If we lose that, you're going to next level I have down here, unfortunately, is going to be down here at that 61.6650 level. There are going to be some different levels also. There's something going on right now with Thinkorswim, and I keep losing my levels every morning I come in, so I'm going to have to keep redoing my levels every morning until they figure out what their bug is. But I think these will be some decent levels here, but these won't be bad levels here to utilize for your support and resistance levels right now. But I think that overall, let me see here, default right here, 63.7175 is your line in the sand. If we lose that level, I think that over the course of the next few weeks, we could get down to this 61.6650 level, which is February of 2025's high. If you do get some pop and you start pushing on the upside, again, we need to get above that 200-day, and that's way up there at 66.70, 66, 67, 61 level. You got to get above this in order for me to get long today. I'd want to be above at least at the bare minimum 65.36, which was yesterday's close. You can see we're going to get all kind of resistance right now. This is August. This right here, this I would say this 65.2315 is August of last year's high. Could get a little pop in there. I wouldn't mind a little pop and fade in there. Here's yesterday's low sitting just below it, sitting there at 65.1549. So downside looks like it's coming here in the morning. However, you got to be careful. We are coming into some pretty big support levels here. So let's get over into the SPY. We'll move kind of quickly today. Again, if you're new to the channel, subscribe to the channel. Hit that thumbs up button and like this video. SPY, same thing. We're coming into Monday's pre-market low, 641. If we lose that, you have 639.85 down there. That's July's 2025's high, monthly high. That's not a bad level there. If you lose that, I think you quickly come down to 634.92, which is September's monthly low. I have nothing in between there to stop that. Below that, you have 631.30, which is a daily low of August 2025. And then I think you have a monthly low of 627.04. Below that, nothing until 619.29. On the upside, same thing for the upside. You're going to want to regain yesterday's, let's get over here and do that. Want to regain yesterday's close, 645.09, in order to get the get that push into the upside here. Into 649.40. If you get that push, I would not be surprised if you get that pop and fade right now. Right now, when you're below all of these moving averages, your strategy during the day should be all pop and fades, right? Market moves up to certain levels, you should be thinking, okay, these are levels where I want to short it, right? Or if you get it extended, you should be looking for levels where you want to get long, right? So now let's get over to the NASDAQ. Again, if you're new to the channel, like this video and subscribe to the channel by hitting that bell over there so you can get future notification. NASDAQ, we are losing, though, the pre-market that we had from Monday, so that's something to pay attention to. And it's actually losing at very significant level here right now, 23,768.27. If you get that pop in the morning, use that level for a nice pop and fade, or you can use yesterday's close, sitting here at 23,819.39. Those would be decent levels to use for the downside. You have a September of 2025 low here at 23,905. You could use as support or a level to take a short, and that's your target. The next level below that is a weekly low from August of 2025 at 23,371.50. Below that, I have nothing until a weekly high from July at 23,112. So there's a big void down there. It's a big speed zone down there. If you lose that 23,371.50, I think there could be some pretty accelerated selling coming on in there, right? So I would say upside today. Need to regain at least yesterday's close to get some upside. I would watch out, though, if you do get that squeeze, 24,041.75 could be a little resistance there if you did get a really big squeeze. Maybe there's a big announcement for the geopolitical stuff in Iran. 24,306.25 is your next level right there. But again, you have all this headwind in front of you. You've got all these levels here. You've got a point of control level that's still open from 2 days ago at 24,437.26. Above that 200-day moving average, 24,550, and then above that 20-day moving average at 24,615. Let's get into the Qs. We'll get into the Qs, and then we'll move on to Tesla, and then we will close it up for the week. Qs, kind of wiki here. I'm not really sure what that is, but don't pay attention. When you see those big, crazy wicks like that, it's nothing to pay attention to, especially in post-market and then pre-market levels, right? Hours, right? So same thing with the Qs right now. We don't have any open point of controls. I would leave this as an open point of control still. I don't pay attention to that. So this 589.26, if the market pops up into that, I would use that as a resistance level. I'm going to get rid of this one. I don't know what that is. I would say a pop into, we are below yesterday's low. So I would use, actually, you could just use yesterday's close as a level here. If we pop into yesterday's close, you could use that as a pop and fade, 573.66. If we do squeeze above that and hold, you can use that as a level of support, 574.63. Take that into your target, 580.74, which is November's monthly low. Actually, I would do, if you're patient, and which you need patience with trading, I would probably sit back, and if you do get a squeeze in here, this is where I would look to take a short right here, 580.74, which is a monthly low from November, right? You could see it was holding, we lost it, and now if you come back, it's a break and a retest of that level to take it more downside, right? But if you do take that short right there, you got to have your stop just above it, right? Or you can just be more patient and just wait and see how the market responds here. If it pushes through it, this is your next level of support. But for today, being below all these moving averages, I'm looking for areas where I can short it. Do you want to short it now when the market opens? I wouldn't. When the market gets extended like that, it makes me wary on fear of missing out and selling into a short, and then we get that gamma squeeze, and then next thing you know, you're chasing everything, trying to get out of the trade instead of being patient, right? So that's something I'm not interested in. I'm not interested in chasing these shorts on the open. So be patient when it comes to trading. So let's get into Tesla. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video, and go down in the description area so you can hit that link and join our Discord community for live trading from 9:30 a.m. to 11 a.m. Eastern time. Tesla, we still have this open point of control. Actually, let's start with the point of control charts here. Point of control, nice and clean here. We have a point of control here from the 25th at 388.90, still wide open, you can see. Above that, you still have a point of control that's open from the 18th at 397.89. That still did not get filled. We are still below the 20-day moving average. 392.81 and 395.89 is a 200-day moving average. So you can see those got rejected pretty handsomely up there. On what day was that? That was on Wednesday. So and then yesterday we had this, Trump and the administration speaking. So created a lot of downside here. So we still have this this point of control that was filled on Friday of last week, 365.83. And then this is something to keep in mind, this is still pre-market Monday. So we are still above pre-market Monday, right? So everything that happened this week, it feels like, we've been kicked in the teeth, and everybody's saying, oh my God, I'm down so much. Well, look at where we started on Monday and look at where we are today. So we're still higher than what we were pre-market on Monday. So that's something to keep in mind. If we do lose this 356.88 level, which is pre-market on Monday, we have that last open point of control at 334.07 from September of 2025. I'd like to see that filled. Once we fill that, then we can start moving higher and going after these open point of controls we have. First point of control, 388.90. Beyond that, 397.89. And then if we could get above that, we get above the 20, get above the 200, then we could start moving to the 50 and the 100 moving average. The 50 sitting at 410.18, and then the 100 sitting at 427.17. If you can get through those, then you can start getting through these higher up point of controls. One sitting at from January 5th at 455.12, and then the highest one that we have from December 26th of 2025 at 478.39. So it'd be great if we can start getting back to some normalcy and getting there, but I think we're still a little bit, a few weeks away from market sell-off right now. I think when the more people, if you start talking to people, I think if you really want to get a good gauge for the market and you want to feel things out, talk to people, find out what people are doing, what people what people feel. And if the sentiment right now is everybody is like, oh, I've had enough of the stock market, I want to get out of this, that's when you want to buy. When blood is in the water, that's when you want to buy. That's what Warren Buffett used to say. When everybody's comfortable and everybody's rosy, that's when you want to sell. When there's blood in the water, that's when you want to dip your toe in. If you have some dry powder, not a bad idea to start scaling into some things that have been oversold right now. I think that for the most part, things we're 95%, into this sale, into the selling that's been going on over this last month or two. So something to keep in mind there. Anyways, let's get into what we're going to do for today. So today I am not even going to mess with today's expiration date. I'm going to go right into Monday's expiration date. I'm going to start with the 375 calls. So it's going to be about $6 away from the current price where Tesla's trading at. I call it 370 right now. And then I'm going to have the 365 puts. So pretty similar in space, right? So I'll call it about $5 below the current price for the puts, $5 above the current price for the calls. You can see where they closed yesterday. The calls closed at $4.90 and the puts closed at $3.30. So right now I expect the put premium price to be elevated because we are below the closing price. We probably, by the time the market opens in another 40 minutes or so, we'll probably may open up right at the close, right? So I don't see any economic data out there today. I don't see any more news that's being reported at this point in time. So these premium prices could be open. They could open up, pretty close to where they closed yesterday, give or take 30 cents up or down, either way. So I'm not even going to mess with today's expiration date because I just want to give some time on these premiums here. Again, but the one thing that I will tell you, since all this stuff happened with Iran, I have lowered my lot size significantly because and it's been doing okay. I'm trading longer, my days are longer, but I'm just not, the market's too whippy. We're getting too many whippy candles, and you're not really getting some direction in the marketplace until like later on in the day, right? So most of the time, so here's yesterday, all these wicky candles, you're not, before we would get more solid candles in the first 15, 20 minutes and you can make your money early and be done. But this wickiness right here, like this first 5 minutes yesterday, this is a roller coaster ride. You don't know which direction you're going. Your premium prices can move up or down 30 to 40 cents up or down in seconds, right? And there's no way, if you're trading options, there's really no way to get a handle on it. You need good, solid candles, right? So anyways, but that being said, you did have a break on the upside yesterday. When the range yesterday for the 5 minute was 381.31, 383.39. So you had about a $2 range. You broke it a little bit on the upside. Could have made a few pennies, but nothing to write home about. Your move was downside clearly. You got your move at about 940 yesterday. So once you broke that and you broke that low of the day, which is 381, you definitely could have ridden it out if you stayed short all day, but you had to pay attention to what was going on. It started getting pretty spiky with the news, and you could see these wicks are not great moves, but if you did sell that 381, and if you did stay short all day, you were probably getting about $8 or $9 out of that move, which translates into about a $5 premium. And so what we go over all the time, we base it all on a one lot. If you get $5 on that premium on a one lot, it's a $500, right? And so if you do the multiples on that, if you do a two lot, that's $1,000. So, but if you come into the trading room, go down in the description area and join the Discord community. We'll do live trading from 9:30 a.m. to 11 a.m. Eastern time every day, and we go over these trades, more. In a macro level here. So I go over when I'm going to take the trade, why I'm taking the trade, where my stops are going to be, where my take profits are. And sometimes most of the time I probably, depending on how the market's trading, I'll change my strike price for the calls and the puts. But anyways, if I don't see you in there, have a great weekend. I'll send a video out on Sunday. Also, we have our newsletter that we sent out our first newsletter on Sunday. So if you want to get that newsletter, please go to our website at QOLTrading.com and just sign up there so you can get on that subscription list for the newsletter. And we're going to be sending that out every Sunday. It's kind of a recap of the week and what to expect for the following week. Aside from that, I'll send a video out on Sunday for the week ahead. If I don't see you in the trade room, have a great weekend, and we'll talk to you soon.